If you don't know these 3 liquidity pools in the market, then you will find it extremely difficult to become a profitable trader. There are 3 main types of liquidity, and that is equal highs and equal lows. All equal highs and equal lows is simply when price action comes to the same point in the market more than twice without breaking that exact point. For example, right here, as you can see, imagine these lines are candles and price action taps this line at the exact same point in the market twice. The other type of liquidity you have in the market is trendline liquidity, otherwise known as lower resistance liquidity runs. Now, all this simply is if you are able to draw a perfect trend line in the market, then that means there is simply liquidity resting in the market. And then the third draw of liquidity, and that is simply swing highs and swing lows. Now, that is pretty self-explanatory. Whenever there is a swing high or a swing low in the market, that simply means that there is a lot of liquidity resting in that point. If you want to master how to use these liquidity pools and incorporate them into a day trading strategy, make sure you join my Discord. I have over an 80% win rate and I trade live every single day. The link is in my bio. You only need to be trading with liquidity and fair value gaps in the market. If you are using anything else or any other strategy, you are simply overcomplicating your day trading. Now, if you just simply use fair value gaps and liquidity in the market, you can accurately be able to read price action. For example, here, what we have is a sweep on sell side liquidity right here. As well as the sweep on sell side liquidity, we have also now created this bearish fair value gap. Most ICT traders would not ever be interested in short positions from this bearish fair value gap, but I am, and the reason I am is because I wait for an inversion of this bearish fair value gap. So all that means is as soon as we get a candle close above this bearish fair value gap, you can enter into a long position. Your stop loss simply goes if we get a candle close back below this now inversion fair value gap, and your take profit is simply buy side liquidity that is resting in the market. This model has over an 80% win rate, and I trade it live every single day in my Discord. The link is in my bio. Trading is easy, you are just simply not doing it correctly, and that is probably because you don't know how to trade fair value gaps. All I mean by that is your average trader would never look for long positions in a situation like this, and that is simply because, as you see, we have this market structure shift or change of character to the downside, and that means traders are now going to look for short positions from a bearish fair value gap like this. What I actually do and what I teach all my traders is to ignore this as a market structure shift, see this as a liquidity grab to the downside, and then only be interested in long positions if we inverse this bearish fair value gap. Now, all an inversion means is as soon as we get a candle close above this bearish fair value gap, this means we enter into a long position. My stop loss goes if we get a candle close back below this now inversion fair value gap, and then my take profit is simply buy side liquidity in the market. This model has over an 80% win rate, and I trade it live every single day in my Discord. If you want to learn this day trading strategy and watch me trade live every single day, the link to my Discord is in my bio. A 100% win rate is what I had today, and all I trade with is simply fair value gaps, and I use liquidity in the market. I don't use fair value gaps how you have probably been taught to use fair value gaps, because that is simply incorrect, because that is simply the incorrect way to use fair value gaps. What you should really be doing instead of shorting a bearish fair value gap is waiting for the bearish fair value gap to be disrespected and inversed. For example, as you can see right here, we have this perfect bearish fair value gap. Now, most ICT traders would never imagine of longing from a bearish fair value gap like this, and that is simply because they have not been taught to. Now, what you should really be doing is waiting for a candle close above this bearish fair value gap, exactly like this. What this tells me is that this bearish fair value gap has now been inversed and disrespected. So what I can expect is I can expect price action to come up and fill an unmitigated bearish fair value gap, or at least take some sort of buy side liquidity resting in the market. So I will enter on the candle close. My stop loss is simply a candle close back below this now inversion fair value gap, and my take profit is buy side liquidity resting in the market. This model has over an 80% win rate, and I trade it live every single day in my Discord. If you want to watch me trade live and join my trading community, the link is all in my bio.